Are you ready to overcome the complexities and burdens that come with your success? Join the team at Centura Wealth Advisory in the Live Life Liberated podcast. Now, on to the show.
Hello and welcome to Live Life Liberated with the team from Centura Wealth Advisory. Joining me now is your host, Chris Osmond. Chris, what are you going to be talking about today on Live Life Liberated?
Well, good morning, RJ. Thanks for the introduction. Today, we're going to be talking about investing in multifamily real estate, as well as introducing our newest real estate sponsor partner, Continental Realty Assets. And so we're excited to dig in today.
Okay, then why don't you introduce your guest?
All right, perfect. Sounds good. So first, I think it might be helpful, give a little bit more background. So when we're talking about multifamily real estate, today we're really going to go over, hey, what are Centura's investing goals? Why multifamily real estate? Who is Continental Realty Assets or CRA? And what is their strategy? And then we'll touch on a little market environment, but not in the context of, hey, what is the current outlook, but more so, how has CRA taken what they've learned navigating previous market cycles, and how is that driving their ultimate approach and decision making today? So for those who don't know, I'm the Chief Investment Officer here at Centura, and really the appropriate audience for today are ultra high net worth individuals and families, as well as the advisory community that serves them. And so with that, I want to introduce our guest today, Managing Director at Continental Realty Assets, Rob Ireland. Rob, thanks for joining me today. Look forward to digging in. It'd be great if you'd give everyone listening a background on you from an education, family, professional career. So with that, thanks, Rob.
Thanks, Chris. Thanks for having me today. I really appreciate the partnership. And I am the Managing Director of Investments here at Continental Realty Assets, CRA. I graduated with a degree in finance and real estate from Colorado State University. I have 3 little boys and a wonderful wife, live in Denver, Colorado. I have been in the multifamily specific industry for nearly 20 years now. I started off as a multifamily broker and have been with CRA for nearly 18 years at this point. I started as an investment analyst, and CRA has become my family. So love coming to work every day and the ability to work with folks like you.
That's great, Rob. And what an anomaly, 18 years, one firm. That is unheard of in today's environment. But I think definitely speaks volumes to your point of the family and culture that you have worked with and helped establish at CRA. And I think as we discuss further today, we'll uncover some of the natural alignment from some of those values and collaboration. So I'm excited to dig in. I think before really start digging in, it's also important to provide a little context. As I mentioned, we really want to discuss a little bit about what are Centura's goals when it comes to investing. So when we're investing, making any investment, particularly in alternatives, we want to establish this win-win-win outcome whereby we're creating a win scenario for our clients, a win scenario for the asset managers and sponsors that we work with. And if we do that right, ultimately Centura wins as well. We are very oriented and anchored in income tax planning. So ultimately, whenever possible, we want our investments to align with that focus on income tax planning. And so if we can reduce or eliminate any sort of tax through investment, that's definitely a overarching goal and driving factor. And if possible, given the overall cost of alternative investments being a little higher than other perhaps ETFs, passive investments in public markets, we're able to create some sort of alignment with those sponsors through fee negotiation or whatnot. That's also really valuable to help pay for our service and pass that on, those benefits on to clients. And then ultimately with any investment, how can we optimize or maximize total return? And really in the context of ensuring that the return we're getting, we're being compensated for the risk we're taking. And ultimately, we believe that investing in real estate, particularly multifamily, really aligns and allows us to achieve those goals. So I really want to dig into multifamily investing, and with that, Rob, if you wouldn't mind, I think it'd be helpful first defining what is multifamily real estate investing, and what are some of the investment merits of this asset class?
Yeah, absolutely, Chris. If CRA has been doing just multifamily investment for many years, basically the entirety of our history, which our founders started CRA in 1982. We started off primarily as a pension fund advisor when, this was truly an alternative investment, and have expanded our, investor base and platforms from there. But again, only multifamily. The reason is primarily there's housing's a need. You don't necessarily need a place to work anymore. You don't necessarily need to have a brick and mortar store to sell your product, but you need a place to live. So that's first and foremost. I think the merits of multifamily investing is they provide great risk adjusted returns. Certainly outperformed other commercial real estate assets over the last 20 years. Again, it's a need. There's demand for it. Some of the merits, obviously, of real estate investing specifically, there are some tax advantages. We are able to take, depreciation to offset income from the rental income on an ongoing basis. We're also able to provide, and we do, cost segregation analysis, effectively taking out the shorter life pieces of the real estate, such as carpet, for instance, and we provide accelerated depreciation, which can offset even more of those gains, and you can take it forward. More specifically, there's also some arbitrage on the back end, as you won't be taxed at ordinary income for those dividends, but capital gains on the backside at sale. But multifamily in general right now is in such demand from an investor standpoint, I think, because of the lack of supply and the amount of demand. Now, there's some short-term supply, hitting the market. I think we're all aware of that. But over the long term, we're in a housing crisis. After the pandemic, Chris, I think we all learned that the most two important things that in people's minds were housing and food, probably food and housing in that order. And they needed a roof over their heads and they needed to feed their families. And so we found that people paid their rent, at least at the beginning. And, as times progressed since 2020, we're now at a point in the cycle where single family homes are just simply unaffordable. Rent to income ratios right now are all-time lows. And there's a $680 delta between the cost to own a home, just a mortgage, and the cost to rent. So there's a lot of demand and a lot of reason for multifamily investments. And different points in the cycle create different opportunities, of course, but that's why we've elected to invest in multifamily over the long term, and we'll continue to do so.
Great. Yeah, no, thank you. Absolutely agree, particularly when you look at the affordability of single family housing relative to multifamily. Just staggering, the difference in cost and the burden that puts on people.
Absolutely. And I think that that's going to continue. I mean, I think everybody's seen the headlines that single family and multifamily starts are falling off of a cliff right now. That's because of high cost to finance, which I think we all hope will come down. But labor and materials, I don't think will. That's going to be a constant issue. And it's really stemmed the ability for home builders and multifamily developers to build. That's going to have a compounding effect over the next 4 or 5 years.
No, agree. And I know we'll dig into that a little bit further here when we dig into the market environment. So excited for that topic. I want to pivot slightly and talk about the value of collaboration and alignment. I often joke with our analysts when we're doing due diligence, when they ask why we are so rigorous and do so much. And I often joke that, well, it's a lot harder to get out of an alternative investment today than it is a marriage. And, I know that's probably a bad joke, but it's true. So we really need to ensure that the investments that we make and recommend to our clients, that we are aligned and we have a strong collaborative working relationship. I'm curious, how important is collaboration between what CRA does and what Centura is doing on behalf of our clients as a wealth management firm?
Oh, it's very important. We have to understand your goals and your clients' goals before we can meet them and provide you with investments that make sense for you and your client base. During our experience, I guess we've known each other for a little over 2 years now, Chris, and got to know your entire team. I mean, you're some of the most detailed, professional, and organized organizations we've ever dealt with. And we've dealt with some very large institutions. And I've never seen this level of due diligence ever, which speaks to your ability to go find good sponsors. And we were so happy to be approved. But collaboration on an ongoing basis, whether it be understanding changing goals for you or your clients, or understanding if a specific multifamily investment works or not, is at the utmost importance.
Great. And you talked about some of the rigor of going through our due diligence process and the detail that we require. What was that experience like? Did you feel that as a burden, a nuisance, appreciative? Just can you talk to me about what it was like going through that experience?
Sure. I mean, I'll be totally transparent. When we first got the due diligence document, I think we were all a little bit floored. We're going, oh gosh, this is going to be a lot of work. And then we discussed internally, and you're a group that has a fantastic reputation that we wanted to work with. So it went from initial shock to let's put our heads down and get them all the information that they want, be entirely transparent. We don't have anything to hide, and we want to be approved. So, that due diligence process took a while, as you know, and we collaborated with one another during that process. And during that process, we got to know your team. And I think in today's age, you work with people you want to work with, right? Life's too short, I think, to work with folks that maybe don't align with your values, goals, those sorts of things. And we found out very quickly that ours did. So we were willing to obviously do whatever we could and provide whatever information you requested. We're happy we did so.
Yeah, and I can tell you, we definitely appreciate the level of transparency that CRA demonstrated throughout that process and continue to exhibit as we work together, and even underwriting, because we do underwrite each property one by one. And so we appreciate the level of transparency and proactiveness from CRA. So thank you. You mentioned core values. I think it's a great segue. At Centura, our culture really drives a lot of the productivity and the success across our organization, as our employees are our number one asset. And we feel that culture is one of the main reasons that attracts people to our company and why they stay. And our core values really help drive that culture. And that's excellence, integrity, passion, transparency, respect, and trust. Throughout the due diligence process, we felt there was a lot of alignment with those core values. So wondering if you could talk to our listeners a little bit about what are CRA's core values?
Sure, absolutely. We share the same core values. Maybe we define them differently, but I think that those are very important, not only internally, right, but for our residents and our investors. I think that's a challenge. It's having respect for everyone. It's aligning, the goals of our investors with what we want to achieve for our residents. For instance, we partner with Apartment Life. So we provide a cares team, we call them, to every property to cater to our residents that are in need. We want to provide quality housing at an affordable price, but we also want to maximize returns for our investors. And that's a slippery slope. We want to carry ourselves in a way that makes us feel good at the end of the day. And I think that you want to do the same. And that's ultimately what those core values mean to me. It's everyday actions. It's not words. It's how we treat our investors. It's how we treat our residents. It's how we treat our team members here. CRA, like I said, is my family and always will be. I will be here forever. I don't have any intention of leaving. And so I think that it's very important. And if you have all those things and you work with folks that have those same core values, such as Centura Wealth, it's a great day every day. It's a great day to come in the office. We have passion here. We love what we do. I love coming to work every day. Like any job, it's not always easy. It's often very hard. But I feel very fortunate. I think everybody here feels very fortunate to do what we do on a daily basis. And we don't want to just be investors, right? We don't want to just put money into a deal and take it out. We want to impact our residents' lives. We want to impact our investors' lives. And that's what we're here for.
Very, very well said. And, I think back to how we actually discovered and were introduced to you and CRA, Rob. And we put a great deal of emphasis on sourcing, trying to really leverage every network possible. And I think that when we were introduced to CRA, it was actually through one of my fraternity brothers, and who used to formerly work for JLL in their capital markets division. And we reached out to him, just really like, hey, who's a great operator that would align with what we're ultimately trying to do? And you were the only group that he recommended because of that alignment of interest and overarching core values and approach to doing what's in the best interest for your residents, investors, as well as employees. So I owe him a special thank you for the introduction, which I've given him multiple times, but that speaks volumes, I think, to the testimony and recommendation from my own fraternity brother. So
yeah, we certainly appreciate that. And Josh Simon has become a great friend, personally, and to CRA. Can't thank him enough for this introduction.
When it comes to investing, alignment is big, right? We just talked about collaboration, core values, but then there's the more quantitative aspects of alignment, such as skin in the game, the investment that CRA makes in each property, to fees, which ultimately are one mechanism for incentive to achieve great return outcomes. I already mentioned earlier, one of our goals when partnering with premier and highly qualified investment sponsors is trying to negotiate better fees, favorable outcomes that, at least from a client, favorable terms, which ultimately benefit our clients and, within, pay for our services. And it's really a paramount step in our due diligence process. You invest with a lot of institutional investors. What was the process like negotiating fees and terms with Centura? And what were some of those driving factors when it came to providing some of those concessions?
Sure. Well, I think first and foremost, when you both want to work with one another, the negotiation is more cordial and respectful. And that was certainly the case with Centura. We wanted to work with you. So the negotiation was very smooth. I think we started at a good base point. Admittedly, our institutions, hopefully you're not listening here, probably get a worse deal than Centura. There's a couple of reasons for that. One, your ability to kind of pool like-minded investors, right, on a mass scale is very, very valuable. I think that I haven't run into many advisory firms that specialize in alternative investments. It's just not that common. It's very important, and I think it'll be more common, but you all are certainly the front edge of that. We also liked the fact that you were very detailed, that you want to be involved in the process. You underwrite the properties alongside of us, and then it's effectively another, eye in the room to look at these investments and say, yes, we like it. I mean, frankly, Chris, if I brought a deal to you that you all did not like, I would have second thoughts about acquiring it. I don't think there's going to be many of those because I think we've determined what makes a deal work and what does not. But that's very valuable to us and warrants a discount. And then I think, just like I said, just the ability to be more passive going forward after that kind of front end analysis is very rare. Obviously, we are required to provide certain reports, and we're going to consistently update you on the progress and status of any given investment, any given time. But the ability to understand and trust us is very important. All those things together cumulatively were why we were able to give you all better deal than we would give anyone else, if that makes sense.
Yeah, no, it does. And we are very appreciative of the relationship and the entire negotiation process and the outcome. I think our clients are very well positioned to capitalize even more so than had they been a standard kind of retail investor. So we are very appreciative. And on behalf of both the firm and clients, thank you.
Of course.
So now I want to really dig into CRA. Who is CRA? What's your investment strategy process? If you wouldn't mind just introducing our listening audience in more depth, like who is Continental Realty Assets?
Sure. So as I mentioned earlier, the company was founded in 1982. There's been several different iterations. We were originally Continental Realty Advisors. We have a parent company now over top of CRA and also do a little bit of development as well. So, we've kind of grown into this, bigger, company as years have gone on. We've worked with many large institutions over the years. So we like to think of ourselves as a boutique firm that's institutionally trained. At CRA, we're data junkies. I know a lot of people say they're research oriented. We certainly are. And I think we kind of treat any given market, we try to predict it much like a stockbroker's analyst would look forward in the market, in security market, if that makes sense. We try to take every single market, 100 largest markets, and sort them in any given year based on certain variables, such as job to permits ratios, employment growth, affordability. It's a very integrated process, detailed process that we spent years creating. It's not, quant in that sense, but it's pretty close. So for instance, we identified Albuquerque, New Mexico, maybe 3 or 4 years ago as being a market we thought was in the upswing. We look at jobs to permits ratio, the higher the better, and projected employment growth, which is most correlated over the last 20 years to true rent growth. And we saw something. We're now the largest owner there, and that market has outperformed the nation since we've purchased those assets. We look at different metrics every year. Affordability is very important right now, right? Rent to income ratios are very important. So all that being said, we're just very data oriented. So we start there. We look at any given market. And then we look at submarkets. We're interested in employment support, retail support, transportation support, And we're looking for demand to outweigh supply, of course, right? Over the long term, the hold period. From there, we're looking for motivation. We're looking for a reason to do any given deal. Without all those things together, Chris, it's not something we're going to be interested in. And I'll tell you, for that reason, we typically do somewhere between 2 and 6, property acquisitions a year. We're a real estate firm. We're not a capital firm. Every deal counts. Every deal matters. You say skin in the game. We invest in every single deal personally, the principals here at CRA and most of the employees. So really, it's not a fee business for us. What's important is alignment with our investors and our acquisitions, our investments themselves personally. So we think that that's a good way of doing business, and that's the way we've done it over the years. Just kind of a quick summary of our returns, I guess, over the last, our entire corporate history. We've done over $4 billion in acquisitions. Our average IRR is 26%, average multiples 2.3x. We're happy with those. We didn't get into this industry in 2021 and buy some properties and sell them. We've been here for 40 years. We're tried and true, and that's who CRA is in a nutshell. And that's our process. I could go on for hours about how we analyze markets and what makes any given investment viable. That's what makes us, frankly, different.
Yeah, no, I will definitely say I have not come across many real estate operators that operate. And I think you said it best. You likened it to almost doing stock research, because it reminded me of a very top-down, bottom-up approach when it relates to public market analysis, where you're using data to drive perhaps location or even asset class, if liking it to public markets or sectors. And then from there, really drilling down and then identifying from a bottom up, what's the best investment to actually put the money in this market, right?
Right.
So it was very easy for me to really take hold of your investment process. And that's how I kind of liken it, just that top down, bottom up. So I like that comparison that you gave, very data driven. I think when looking at real estate investing, particularly when it comes to multifamily, I don't, I can make cases for both, whether 100% vertical integration, non 100% vertical integration. There's, I think, pros and cons to both, right? And the approach with CRA is not 100% vertically integrated. So I wonder if you could talk to us a little bit about your approach there and the driving philosophies for that matter, and how you derived at that approach.
Sure. Yeah. And I think there's cases for both, like you said. For us specifically, because of the way that we analyze markets and pick markets on an annual basis, it just makes more sense and it's more fluid for us to engage in a third-party management company. Now, that being said, we vet them. We have certain management companies in different markets. And in fact, we have different management companies for different asset classes. And by that, I mean value add versus core. There are certain companies that do those different things better than the others. Your people are the most important things in any given multifamily site. So, they're the ones that actually make or break any investment to me. Your people are very important. And so we feel that we get the best people by picking the best management company. We leverage what they've already created in any given market. And we feel like that's a better model for us than a fully vertically integrated model, which may limit us from moving to a market that we feel will outperform the nation over the next 5 years. That's why we've done that. Now, having said that, we also try to make sure that the fees are aligned. So we spend more time on an asset management side than most folks do, being involved in the properties. We have very high level people here at CRA. Todd Job is our director of asset management and has many, many years of experience. And so we're able to kind of decrease the actual property management fees on site because we're taking on some of their workload. So our combined, asset management and property management fees aren't any different, frankly, combined than what most property management groups charge. So we feel that the investors are kind of getting the best of both worlds that way.
Yeah, no, and I can speak personally from doing property tours during the due diligence with Todd and meeting with the property managers. Very, very skilled, Todd is, and very
Yes,
impressive from an asset management standpoint. So,
absolutely.
yeah, I can see why you have such a high level of confidence in him and his abilities.
Yeah, and a good example, Chris, is I go back to this Albuquerque example because I think it's a great case study. We were looking at jobs to permits ratios, right, and affordability measures, and it's the most affordable MSA over a million in the Western United States. Okay, but nobody was investing in it at the time, and we just saw it. But if we had our own management company and we were forced to go find people in Albuquerque, New Mexico, we wouldn't have been able to scale up the way that we did. I think that's a great case study and example of why we do things the way that we do.
Yep, I would definitely agree. So I know we're coming up on time here, but in a few minutes. But before we do, I do want to discuss a little bit, and you've hit on some of these high points already. But 1982 founded, right? You've worked through multiple market cycles, from the Great Financial Crisis, COVID. Wondering, when it comes to the market environment, how are you drawing off of that past experience to really navigate today's environment, and even perhaps more importantly, positioning yourself today in investments to capitalize on the environment in 2, 3, 4, 5 years?
Yeah, I think that what we learned the most probably during the post-Great Recession is that you don't over leverage. If you keep your leverage fixed and you keep it, low, you can ride out any market cycle. We did that prior to the Great Financial Crisis, and luckily we were able to navigate through that. We'd bought in 6 properties right before, I guess, between 2007 and 2008. Those assets combined, both funds, averaged I believe, 8 IRR. So we were able to hold through that period of time, and so what we learned is we were doing the right thing. Right? You pick your spots, you pick your properties, right? And as long as there's basis behind every single investment and you don't over leverage, you're going to be in good shape. I think at this point in the cycle, everybody knows that interest rates are high, and that's impacted cap rates, right? And therefore values of multifamily and other real estate asset classes, at least on paper. It's not that the fundamentals aren't good. It's just that we're in a high interest rate environment. And I think that provides opportunity, Chris. For me right now, it is time to buy. I think there's some folks out there that maybe floated debt, over leveraged, and they're in a position where they're having to asset management and cannot take advantage of this market. We have the ability right now to buy assets at significant discounts to prior peak and large discounts to existing replacement costs. You may be giving up some yield in order to acquire these assets because there's, I think, a hard cap on the cap rates, a ceiling on them, if you will. So you may be fairly close to neutral leverage based on the current interest rate environment and what you can achieve for multifamily financing. But I haven't seen the ability to buy at this level, this basis, or these cap rates for a very long time. So, our opinion is we should be able to provide risk-adjusted returns that are above average, historical average, but there may be a short window to do that.
Yep. No, I think you hit the nail right on the head there with some of these discounts to both peak pricing and replacement costs, and where cap rates sit today. It just feels like there's a lot less downside than there is potential upside. But obviously security selection, property selection is paramount to those outcomes, but would definitely agree.
Sure. And I think, look, it's hard to take cash right now, admittedly, and put it in a multifamily investment that maybe is yielding 3 or 4% when maybe you're getting that in your savings account. But when interest rates come in, so too will cap rates, and values of real estate will increase exponentially. And then those interest rates you're getting on your money market account or your savings account are going to come down. So I think it's a great time to invest in multifamily specifically. I think the fundamentals over the next 5 to 10 years are phenomenal. We think that in 2025 or 2026, in certain markets, we may see double-digit rent growth again organically. And that's just purely based on the lack of new supply. I mean, multifamily permits are down historical lows, right, in 2024. New starts, new permits, all those things are just falling off a cliff. And in fact, I think that the data we're seeing out there is overstated. So that's just going to compound upon itself when we're at neutral, maybe equilibrium here as far as supply demand in a lot of markets right now, which is phenomenal given the amount of supply that has been delivered over the last 2 to 3 years. So what happens when there's no supply in 3 years?
Yep. Agree completely. A lot of alignment in outlook as well. So I think just speaks volumes and bolsters our decision, to partner with CRA. So I know we're closing here, but want to ask one last question, and I should say, turn it to you, Rob, for one last parting thought that you may bestow on our listening audience, whether it's when it comes to investing in multifamily, CRA, anything you want to leave our listeners with.
Yeah, absolutely. I think that, one of the things is we've been doing this a long time. And to me, what's important is being humble, always listening and continuing to learn. We don't know everything. The second you think you know everything, the market's going to flip. So you can compensate for that by being conservative in your underwriting and understanding that you don't know everything. And here at CRA, we're continually trying to learn from the people that we work with and from people like you, Chris. You've taught us a lot. Centura's taught us a lot. We learned something new from all of our partners. I do think that right now is one of the best times in the last 20 years to invest in multifamily real estate. Warren Buffett said, be fearful when others are greedy, be greedy when others are fearful. It's that time. And, we're looking forward to working with you and having some great acquisitions and investments over the next 5, 10, 20 years. We want to be long-term partners. And we want to achieve what your clients and your advisors are looking to achieve. We're always going to be here. We're always transparent. We're always going to be able to pick up our phone. So we're looking forward to working with everybody, and I just really appreciate the opportunity.
Great. Now, thank you, Rob, and a sincere thank you for joining us today, as well as appreciation for the commitment to going through our process and working with Centura. I know that I have every degree of confidence that our clients will benefit greatly, as will members of Centura. So we look forward to continuing to build a fruitful relationship there. So thank you for joining me today, and thank you in general. With that, before I turn it back over to RJ, I do need to just give a quick legal disclosure. So this podcast is for informational purposes only, and nothing discussed today should be considered investment, legal, or tax advice. Also, that past performance is no indication of future results. Thank you. And with that, I'll turn it back to you, RJ.
Before you go, though, we need contact information. Rob, why don't you give us some contact information?
For those interested in learning more about multifamily investing and Centura's approach, or potentially investing through Centura with Continental Realty Assets, please reach out to Centura. You can find our contact information at our website, CenturaWealth.com.
Excellent. Thank you, Chris and Rob, and most importantly, thank you for listening to the Live Life Liberated podcast with the team from Centura Wealth Advisory. If you have not subscribed to the podcast, please click the subscribe button below. This way, when the team comes out with a new podcast, it will show up directly on your listening device, and we will humbly ask you to share this podcast, rate it, and leave a review, because this actually helps others find the show. Again, thank you for listening, and for everyone at Centura Wealth Advisory, I'm RJ Malik, reminding you to live your best day every day, and we'll see you next time.
Thank you for listening to the Live Life Liberated podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Centura Wealth Advisory. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. Centura Wealth Advisory. Centura is an SEC registered investment advisor with its principal place of business in San Diego, California. Centura and its representatives are in compliance with the current registration and notice filing requirements imposed on SEC registered investment advisors, in which Centura maintains clients. Centura may only transact business in those states in which it is notice filed or qualifies for an exemption or exclusion from notice filing requirements. Past performance is no guarantee of future results. Tax relief varies based on client circumstances, and all clients do not achieve the same results.